Shall we start today, Kanaya?
Yes, yes.
Okay. Kanaya, please confirm me if I'm properly audible and visible.
Yes, yes, yes.
Okay.
Perfect.
To begin
Voice
with,
is loud and clear.
sure, perfect. To begin, let me first of all welcome all the participants who joined us today. Good afternoon, everyone. I am Krishan Vashisht from International College of Financial Planning. I am pleased to introduce our guest speaker for today, Shalini Gera ma'am. Let me introduce to all of you about Shalini ma'am. Shalini ma'am is an engineer turned into a finance professional. She did BTech and MBA in finance and marketing, and thereafter completed her CFP education certification from FPSB USA. Shalini ma'am has worked with institutions like DRDP, SAI, and ICICI Bank, with her longest stint at ICICI being close to 8 years. For the past 3 years, she has been entrepreneur and is a senior partner with leading financial advisory firm Ingenetus. Shalini is also a great speaker and has many more videos on various financial topics to her credit at YouTube. Thank you, ma'am, for giving us valuable time to share your experience with all of us. One thing I just want to convey to our audience, please. We kept everyone on mute till our guest speaker is sharing her experiences. After this, we will be unmute you one by one. Kindly raise your hands on Zoom panel so that me and my team will unmute you and you can ask your queries from Shalini ma'am. Shalini ma'am, handing forward to you.
Thank you very much, Krishan, for that warm welcome. Thank you,
So much.
participants,
Welcome,
for
ma'am.
today's Connect. Today's topic will be on the science of goal-based investing. We have a series of financial presentations titled Vidya, which we use for our corporate presentations. Today, we'll be using for the financial community. I'll take you through the program guideline. For the first 5 minutes, I'll be covering about Ingenetus. How does it tie to the financial goal-based investing approach? We'll be talking in detail about the guide to investing, which includes our today's topic, which is goal-based investing. And then we'll talk about the importance of goal-based investing. I'll request all of the participants to hear me carefully. Goal-based investing can be a very, very boring topic. So let's make this as engaging and interesting as possible. I'll be speaking to you. I'll be raising a lot of questions to you, and I'll request all of you to answer me with your experiences, your feedback about the questions that I have to ask. So without much ado, let's begin the presentation. I hope my screen is visible to everyone.
Yes, ma'am.
Great. So Ingenetus was incorporated in the year 2012 with a very specific vision in mind to understand the client's financial needs and to do financial planning accordingly. We have 5 key verticals. The last 2 verticals are tax and estate planning, which we could introduce in the company post my completion of a CFP. The 5 key verticals are investment advisory, insurance advisory, lending advisory, tax, and estate planning. So I'll share one of my own experiences when I was initially working in a private sector bank in India in 2011, and I wanted to do my tax planning. I had approached the bank's branch in order to do a tax saver fixed deposit for my tax planning. And I had to submit my investments proofs at that time. So I wanted to do a tax saver fixed deposit. This tax saver fixed deposit was giving me a 9.5% return at that time. Remember, this is 2011 that I am talking about. The returns were 9.5% at that time. And as an employee, of the bank, I was getting 1% incremental. So when I walked into the branch, it was a cold January morning. And I asked a banker to give me advice on various tax planning products. And I asked him specifically for a tax saver fixed deposit. This person asked me, why do you want to do a tax saver fixed deposit? Why don't you go for a guaranteed investment plan? Of course, this is also going to help you in your tax planning. This is going to give you that coverage of ATC. And you also don't have to worry about paying a certain amount each and every year. It is directly going to be debited from your bank account. The person's pitch was that this product is going to give me 2x I'll have to invest X amount every year in this product as the premium, and after 15 years of time, I'll be getting 2x the returns. So on the face of it, it sounds like a very rosy pitch. It sounds like a very golden pitch, and most investors tend to fall for that. But when you do a hindsight calculation, you realize that the returns that are offered in such a product are only a measly 5 to 6% in the current times. This did not have anything to do with my goals apart from tax planning. As a young investor of 20-25 years of age, I should have ideally been given a long-term investment plan which could have generated substantial returns in the market. But instead, I was pitched this stupid product, which was giving me 5 to 6% returns, without understanding my financial goals, without understanding my risk assessment, without understanding the tenure that I wanted to invest for. Why do you think bankers and financial institutions go for such products? I would like to pose this question to all of you. Anybody who wants to answer can unmute themselves and answer.
So you can raise your hand and I'll unmute you one by one.
You can even use the chat box to answer the queries.
Right.
Kanya, Mr. Venkat has raised the hands.
All
Yes.
right.
Hi.
Yes, Mr. Venkat, you can ask your question.
Yes,
Sir, you
Venkat.
can unmute yourself, sir.
In case you're not able to unmute yourself facing a technical glitch, please use the chat box to answer.
I think most of them have already answered. I wanted to mention that the incentives are
Correct. Absolutely correct.
they get high commission.
All right. We've obviously got a lot of answers. Yes, Gaurav, big commission, Sachin, revenue, commission, Amit Bhatt, obvious commission, Gajendra, obvious revenue, high commission, commission to meet their targets, brokerage sales and target. Tanvi says highest revenue, Paras, upfront commission is very high in fixed return products. Mrinal, banks will be interested in only their profits. Muthu Kumar says to sell financial and investment solutions and commission. Narayan says incentive and travel abroad. Gaurav says banks get to travel abroad. Ram Kumar says to safeguard the bank's outgo. So most of you have very rightly identified the motivation behind selling these products, that it is because of the revenue which is generated. It is one of the highest in products like a guaranteed investment plan and in ULIP products. So these products had nothing to do with my financial goals. And I felt extremely disappointed post that interaction with the banker as to why was I pitched this sort of a product which gave me a 5 to 6% return. Now, I did not opt for that, but most people end up falling for this trap because they do not have an understanding of the returns of the products. And it's something which comes to them only 7 years or 10 years later when they have the final maturity value in their hand and they calculate the XIRR. So this was the traditional return-based investing approach, which often disappoints customers. New age advisors have developed a goal-based investing approach. Goal-based investing approach understands the financial goals of the investor. It understands the risk assessment of the investor. It understands the tenure and the return expectations of the investor, and then it devises a strategy of investments. What this does is it changes a mere transaction to a lifelong relationship. So with this sort of a goal-based investing approach, you are able to develop a lifelong relationship with the customer, which goes beyond that mere transaction. You're able to do a good job. You tell the customer, look, I am with you. I understand your financial goals, whether it's your kid's marriage or whatever your financial goals is, and we are with you in achievement of that goal in your life's journey. That person generally goes out of that discussion or that interaction very happy, and over the long term you'll be able to generate a long-term references out of that relationship and a larger business than what you would have generated had you opted for a guaranteed product or a ULIP product, which should have given you a higher revenue in just one transaction. So this is the advantage of a goal-based assessment approach, which we have now adopted. So Ingenetus was incorporated with that specific instant in mind. When I went through that experience of getting a guaranteed investment plan, we wanted to establish an organization which understood the needs of the clients rather than simply selling products for our benefit. So the vision of the company quickly became to impart financial literacy to individuals as well as to corporates, and the mission became to, in order to become the most respected financial advisory organization in India as well as globally. So when we talk about a guide to investment planning or goal-based investment is now a very methodical approach to investment planning, where we talk about the individual's goals, the risk profiling, as well as the investment tenure. So the first topic that I talk about in my meetings, I often hand over the mic to my investor and I listen to that person for 20 to 30 minutes without saying a word, trying to profile them. I understand their financial goals. I understand the tenure of those goals, whether they are short-term goals in nature, medium-term goals in nature, or long-term goals. I understand the sort of risk that that person is able to assess and digest, and accordingly curate a strategy for them. The short-term goals will be goals which are less than 1 years in horizon. Mid-term will be your 1 to 3 years of a goal, and long-term goals are typically 3 to 5 years and beyond. You must also understand very well the risk appetite, which is there for every investor. You might encounter investors who either want to go entirely into fixed deposits because they feel that they're absolutely safe. And then you'll encounter investors who want to go entirely into equity market as well. That's neither of them are the correct approaches. You as a financial advisor have to use your own judgment, and you'll have to tell the investor, look, if you are entirely going into a fixed deposit or fixed income product, you are not going to be beating inflation. Inflation is at a 7.5% average, while these products are at a 5% or a 6%. That means that if you're entirely investing into 100% of debt or fixed income products, your money is effectively degrowing. You also cannot have 100% of investments going into the equity market, even though the investor would have spent his or her life entirely into the equity market. Why? Because whenever there is a market crash, something that also happened in the year March 2020, stocks and equity products are often available at a discount to us. You need to take advantage of such market opportunities in order to inject cash into the equity market. So in March 2020, when equity market had collapsed to 26, Sensex was at a 26,000 level. At that time, you had good quality stocks at a very discounted price to you. You had a Reliance at a 900 price. You had an ICICI Bank at a 290 price. Reliance today, by the way, is 2,400 rupees, and ICICI today is a 750 rupees stock. So at that time, whenever there's a market crash, a correction by more than 15%, at that time, these stocks are like a gulab jamun on your platter, and you need money to be able to buy these gulab jamuns. So it is very important to have a certain percentage of liquidity or debt products in these investors' portfolio, even in the most aggressive of investors' portfolios, in order to buy these gulab jamuns, or in order to buy stocks or mutual funds or equity products at a discounted price. So that is your job as a financial advisor, in order to explain to that investor that the strategy of asset allocation is very important in your portfolio. Next, you also need to have an understanding of the investment tenure, whether the investment tenure is less than 1 year, whether it's more than 1 to 5 years, or whether it's more than 5 years, and appropriate products need to be given to them. If the investment tenure is less than 1 year, you cannot be suggesting equity products to the person, because the person may suffer capital erosion. Similarly, if the investment horizon is more than 5 years, a fixed income product might not make sense to that investor, because in a long-term horizon, you know that equity is going to deliver returns to you. Now, let's move on to the first engaging round of this discussion. I would want to understand from all of you, what do you think are your clients' most prominent goals? I would like all of you to go onto the website. You can use your phones, go to the website menti.com and type in the code 82089755. Could you please do that? Once you do that, you will be directed to a website menti.com and you will be seeing a screen with the question, what are your clients' most prominent goals? I'll display that onto the screen. Yeah, this should be the screen that you would be seeing on menti.com. Is everybody able to see that? If you could just answer me in the chat box.
Yes, ma'am.
Right. So you need to go on your phone, type in the URL www.menti.com and use the code 82089755. Yes, great. We've started getting the answers. We'll wait for 1 minute for all of you to put in your answers.
Ma'am, please share the code on chat box, ma'am.
Yeah, the code is displayed on the screen, 82089755.
Thank you.
All right, so most of the participants have given in their responses. The most prominent goal that your clients have is retirement planning. Excellent. Then child education, child marriage, financial independence, house purchase, marriage, wealth creation, have my own house. One common contingency, good. So good. I'm glad that your clients are absolutely aware of their financial goals and you are able to get these financial goals out of them during that discussion. So let's move back to the presentation now that we have the results from all of you. So you're very right. Most of the goals that we see each and every day are education, marriage, retirement planning, house purchase, vacation, emergency or contingency fund, somebody mentioned. Another goal that we have seen during the current times is the need to develop a corpus for a startup. A lot of people want to become entrepreneurs. They want to quit their jobs, start their own companies and organizations and ventures in the next 10 years. And they want to start funding for that. So they want to be able to develop a corpus for that. So ask your investors if any such need exists. You must also plan for such requirements. How should one typically invest for these goals? One should identify the income. One should subtract the savings first, and then one should invest. So you should ideally be asking your investor after taking into account their liabilities, what sort of a monthly take home they have. If the person does not have too many liabilities in terms of home loan EMIs, one should be doing about 40% of their investments, of their savings into investments. So 40% of the net income should be going into investments. If there are too many liabilities in the form of home loans or too many kids to an education to take care of, then the amount can come proportionately down. A good investment product should ideally be beating inflation, should always be beating inflation. So inflation is at a 7% in the last 10 years average. So any investment product that you give them should be beating the 7% return. Otherwise, you're not assisting your clients in making money, rather their money is degrowing. We've discussed risk profiling briefly, so I'm going to skip these slides on risk profiling. Let's move on to the goal planning process. Now, what should be the steps in identifying the goals and in designing a financial planning strategy which is centric around the goals? So first of all, you should identify what are the financial goals. The most common goals are what you guys just talked about. You should identify what is the tenure of each and every goal. Very important, because then only the relevant investment product can be mapped to it. Identify the return expectations of the clients. Now, the return expectations also need to be realistic. I once met an investor, a retired 65, 70-year-old investor who wanted to invest 10 lakh rupees with me, was very scared of the equity market, did not understand the equity market for that matter, had only been dealing with their banks, and wanted me to generate 1.5 lakh rupees annualized out of that corpus for their retirement income. I told them this is not possible because you don't understand equity. I cannot subject all of your capital market to equity, and the returns that you're expecting without pure equity is 15% annualized, which I will not be able to generate from you without exposing your corpus to the equity market. What I can do for you is perhaps a balanced asset allocation, where I'll be able to give you some percentage of equity as well as some percentage of the debt market, and I'll be able to maybe generate a 9 to 10% return. So out of 10 lakh rupees, I'll be able to generate 1 lakh annualized for you. So identify and set right the return expectations of the clients. Identify the requirements in current terms. This is also important. So you basically have to identify what is the present value of the corpus. Ask your client what sort of an amount are you envisaging for your clients' kids' education, what are you expecting for your kids' marriage, and then put that value forth in order to derive the rest, in order to come to the next step. Now, I would like to ask one of you that before coming to the conclusion of the goal planning process, I've deliberately skipped a factor, which is the missing factor over here. What do you think is this missing factor in the goal planning process? You can write in the chat box. So what do you think is the missing factor? Tenure, I've already added. Mr. Bhosle says investment. Venkat says inflation. Avinash, priority of goals. Okay. Age, right? So age is equivalent to tenure. If I've got the tenure in mind, it basically takes into account the age as well. Investment horizon is same. Risk, I've already included with the return expectations as well. Products is something that's going to be a gradual outcome of it. So Christopher Sequeira has rightly answered. The missing factor is actually inflation. And somebody else had also, Pankaj had also very rightly answered that the missing factor is inflation. So inflation is basically going to reduce your purchasing power. If my monthly expenses today are 50,000 rupees, they are not going to remain the same once I retire. So inflation is a factor you have to take into account. Inflation is going to increase the corpus that you require today with the relevant number of years, and will give you the required future value. So take into account inflation. Inflation should ideally be taken into consideration as a value of 7.5%. That is the average inflation figure in the past 10 years. Once you have all of these factors listed out, conclude the SIP or the lump sum amount required to reach that goal. And then once you have decided what is the SIP and or lump sum amount, figure out what is the investment required, figure out what are the funds or the asset allocation that you're giving to them, and map each and every investment to that particular goal. We will talk more in detail about this last point in the last slide. It's a very important point to note. Once you've done the goal planning process, your job doesn't end over there. Your goal planning process has to be a very continuous process. So you have to discuss with your clients every quarter. Ideally, you should be meeting with them every quarter. You should be discussing their portfolios. Even if there is nothing more to invest, just sit with them in order to have a discussion on the markets. Sit with them in order to analyze your portfolio. Sit with them in order to identify what is the goal progress. Tell them that your child's education is another 10 years down the line and your percentage completion towards that goal is only 25%. Anything that you get over here should be directed towards this goal. So track each and every goals process. Investable surplus needs to be added towards that goal. Also, very importantly, you need to realign the portfolio with respect to the market conditions over these quarterly meetings that you hold. I'll give you an example of how I conduct this with my clients. So I did this exercise 2 months back only. So we delivered substantial profits to our clients over the last 2 years when we saw the most ferocious bull rally in our equity markets. So all of our investors who had been invested into the equity market were able to deliver those, were able to achieve those astounding double-digit returns. When I sat with certain investors, in the month of October, I asked them, look, we are now sitting at a Sensex value of 62,000. Do you have any short-term goals that you wish to achieve in the next 1 year, or are your all goals long-term in nature? This person replied to me that I need to now look at my kids' education, who is going abroad in the next 1.5 years. So I suggested them a strategy. I told them, you made substantial amount of profits. Let 50% of the profits, let 50% of your corpus value be towards your retirement planning, and rest 50% where you've already achieved the profits. Why don't you book these profits, and why don't you move them to a relatively balanced approach or a fixed income approach where the return expectations will be lesser, but at least you will not face any capital erosion. So good profits, good double-digit profits. We moved out from equity to fixed income instruments, and that person is now comfortably happy, safe in the knowledge that my profit is not going to go down, something which started happening immediately after October. And that person is sitting safe with the knowledge that the corpus will not face any capital erosion and will be utilized for my son's education comfortably. I'll give you a practical example of this goal planning approach that we do. So there are various calculators that you'll be able to utilize for the goal planning approach, and you can also do this exercise easily over in Excel. So first step, we talked about goal identification. This was a client. I've hidden out the names due to confidentiality reasons. This client typically has any regular investors goals like a retirement planning, a child's education planning, child's marriage planning, and he wanted to buy a car as well. So after these goals, we identified the current value, which was required for all of these goals. We plotted these values, taking into account inflation as well as the number of years in which these goals were to be achieved. We identified what was the future value of these goals. Somebody had also rightly pointed out that you need to understand the priority. So understand and plot a priority for all of the goals as well. Whenever this priority is very important, because whenever you have any sort of an investable surplus in the form of either a bonus or a policy's maturity or an increment in that salary, that needs to go towards the goal which has the highest priority. Somebody has very rightly told that you will not get, there is one financial goal for which you'll never get a loan. You'll get loans for all possible financial goals, whether it's an education, whether it's a marriage, whether you want to buy a house, whether you want to buy a car. The only goal for which you'll never receive a loan from a bank is retirement. So that's a goal that needs to be on the top of your list in the form of your priority. You must plan, and you must plan in advanced years. You must plan right from the beginning that you start working for your retirement planning. Once the goal planning process is complete, you need to now move towards the goal mapping process. So once you do the investments and you've identified the list of assets that you wish to invest in, map each and every asset to each and every goal. This is going to help you in controlling the behavior of the client. We'll come to that in the last slide. But here you can see that there was a goal which was child's marriage, and the amount which was required for that in future terms was 1.5 crores. And out of that, 4 lakhs has already been achieved. So we know that 2.5% of the goal has already been achieved. And whatever surplus is available, that will continue to come into this fund, and it will continue to increase the achieved percentage. That way, they'll be able to map they'll be able to track the progress of this goal. Once the goal planning and goal mapping is done over your quarterly meetings, you must start doing the goal tracking process as well. Goal tracking basically helps you in identification of what percentage achievement has been done for each and every goal. So you can see over here for a car planning, since nothing was invested, the percentage achievement is 0. For a house renovation project, the required amount was 16.9 lakhs and 14.6 has already been achieved. For child's education, out of a 1.5 crore possible amount, 5.4 lakh is already achieved. For a retirement, out of this 26 crores, 19 lakhs has already been achieved. And similarly for the child's education, 1.8 crores out of 1.8 crores, 5 lakh is already achieved. Yes. So I was talking about the importance of goal planning, the importance of goal mapping. Why is it suddenly become so important now? The importance of this goal planning approach lies in a new age investment topic called as behavior management. इन सारी बुक्स से जो आप पढ़ते हैं, इन सारी मीटिंग से, ईटी मनी से, न्यूज़पेपर से, आप लोग टेक्निकल स्टॉक फंडामेंटल्स, गोल प्लानिंग प्रोसेस, ये सब सीख जाएंगे. ये सब हर बुक के अंदर दिया होता है. What you will not be able to learn from these books is the art of behavior management. This is something that you can learn only and only once you meet people. So meet as many people as you can in your life as a financial advisor, and understand the behavior that they have. Understand what is their approach whenever there is a market reaction. When the market rallies, how do they behave? When the market corrects, how do they behave? This will help you in understanding multiple behaviors, and this will help you in designing appropriate strategies for your clients. What market correction typically tends to do is it panics investor. When investors start seeing red in their portfolios, when they see money bleeding, they tend to panic, and you start getting calls that I want to withdraw money from the market. So we had the same experience in 2020 when market suddenly tanked to a 26,000 level. Investors could not bear to see -10, -20% returns in their portfolios, and they felt that stock markets are going to go down further, and they did not want to subject their money to any further capital erosion, and they wanted to come out of it. We started getting frantic calls from our investors where people wanted to come out of those equity investments. And there were people who simply did. There were people who listened to no logic or no fundamentals, no historical figures, and they simply did. When those people realized what happened when you exited the stock market in March 2020, equity markets once again rallied within 1 month, within one or 2 months, we were looking at the Sensex figure of 40,000. And these people who exited the market at 30,000 did not get a chance to come back into the market at those levels. At 40,000, they felt that the market is going to correct. This is a false recovery. At 45,000, they felt कि अभी market फिर react करेगी, फिर से correct करेगी. Let's wait out further. Finally, they gave up at 50,000 and they called once again कि ठीक है, market अब recover कर रही है. Let's get back into the markets once again at 50,000. What did they do? They came out at a 30,000 level and they entered into the equity market at a 50,000 level. Imagine the opportunity cost that they suffered by coming out of a financial instrument which was giving them a 20% or a 30% return, and they went into an instrument which was giving them a 5% return, like a fixed deposit or worse, savings account, which was giving a 2.5% return at that time. So it is very important for you to be able to correct and control this behavior, and this is something that goal planning is going to help you to do. Once you do a goal planning and once you do a goal mapping for each and every fund, what are you doing for the client? You are attaching emotions to their funds. Now you are telling them that this fund is not just a fund, it's meant for your daughter's marriage. Please do not touch it. Should you want to buy a car, should there be a crash into the equity market, please do not come out of this fund. This is meant for your daughter's marriage. Please do not exit it. And once they see that this is meant for my daughter's marriage, once they attach their own emotions to it, they will not touch their fund. That's something that you can almost take in writing from us. That's been our past experience. So map goals to funds and attach emotional behavior to those funds and control their behavior. Next, what it helps you do is it helps you provide for exigencies as well. Once you must have an emergency fund in each of your investors' portfolios, and you should have typically 6 months of the expenses planned in that fund. This emergency fund should not be in an equity fund. This should be planned towards fixed income instruments, ideally a liquid fund or money market instruments, or towards ultra short and short-term instruments. The return expectations might be low, but you'll ensure no capital erosion occurs. This fund can then be utilized to in situations such as a loss of a job, in situations such as a medical emergency, or something like as mundane as a car repair. So this emergency fund creation will help you tide your client over difficult times, and they're going to be thankful to you for that. This is also going to help you pick the right investment product. So if your goal is short-term in nature, you know that you can only pick up fixed income products for that. If your goal is long-term investment, you can easily pick up equity products and can map to these goals. So I was talking about the controlling of the irrational behavior in point number 1. Let me show you. So this was a benchmark. This was a global benchmark that I was tracking on what happened to investors and their investments during the market crash. So this point was when the investors had entered into the market. This is the corpus value was at 100,000 pounds. This is reflecting a British index. And this was the point of a market crash. There were investors who decided to come out of the market because they panicked and they exited. And they remained exited. And within 1 year, the investments were still at the same value because they did not get a chance or the courage to get back into the market. Then there were investors who also panicked, who decided to come out of the investment at this stage, and they thought, I'm going to re-enter the market at the correct level when it recovers. So they could not catch the train at the bottom, but they decided, or they ended up coming at a later stage when this blue line starts once again. So this is withdrawal and then entry at a later stage. This investor, when that person invested once again or entered into the equity market once again, at the end of the year made about 200,000 points. Then there were people who, in spite of market corrections, remained invested, stuck to their goals and their asset allocation strategy. And those were the people who made the best returns out of the market. You could see that these people, this purple line reflects the line of people who did not exit a market during the market crash, and they made the highest money at a 350,000 points at that time. So quantify investments for you, quantify returns and corpuses for your investors, and help them in sticking to their asset allocation goals. It said that there are 3 C's which are required in order to make money in the market. The first C is cash. You need cash or liquidity in order to make money in the market for obvious reasons. You need crisis to come by. This is what happened in March 2020, which was basically a black swan event, which we had never anticipated. So you need these crises to come by, and these crises do not come very often. So you need to be prepared for that by having enough liquidity in your portfolios. And final C is courage. You need courage to get into a market where you are already seeing red, where you're already seeing your portfolio bleeding. But when you have that courage, you have conviction in your financial advisor, you have conviction in your chosen strategy. And then when you enter into the market with these 3 C's, cash, courage, and crisis, that's when you're able to make money out of the market. So with that, I would like to end my presentation, but I'd just like to summarize whatever I've spoken about through this short video. Again, I'd just like to confirm from somebody, are you able to see the video and are you able to hear the audio as well?
Yes, ma'am.
Thanks.
Friend Alok has just shifted jobs and got a better pay package. Alok plans to invest this additional money, so Yojak explains the concept of goal-based investing to Alok. Goal-based investing gives direction to your investments, where you invest in a systematic and disciplined manner to achieve your goals. It involves planning and investing. You need to identify and prioritize your goals. Goals could be short-term with a time frame of a year, such as a car or vacation, or mid-term with time frame of 1 to 5 years, such as buying a house, or long-term with time frame greater than 5 years, such as child's education or retirement. Basis your goals, look at your existing resources, and choose the right investment products to create a roadmap to meet them. Goal-based investing increases one's commitment to life goals and gauge tangible progress towards them. Alok decides to plan his goals with his family and follow goal-based investing. What about you? Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
Yes. So thank you for the presentation. Thank you for attending the presentation. And I would like to open the floor for all sorts of questions.
Thank you so much, ma'am, for sharing your valuable, experiences with all the audience and with us also. Kanhaiya, you can start with the question round.
So anyone has any question, you can
Just raise your hands,
and
yeah.
I'll unmute you one by one. Yes, I can see some of the raised hands.
You can unmute Devyani, ma'am.
Yes, Devyani ji, you can
It's
unmute.
actually not Devyani, it's her father speaking. I'm one of the students of ICOFP. My name is Sandeep. Shalini ma'am, I had a question for you that what are your scope for Ingenetus? Like what is the scope of Ingenetus for CFP planners who are coming out in the market? And how many years do you normally give a opening for? Like when do you give the opening for?
Right. So yes, we are hiring certified financial planners for our investment advisory vertical. We typically look for a CFP certification along with at least a year's experience in financial planning for offering a job opportunity.
Venkat ji, you can unmute yourself. Please go ahead.
Yeah, thank you. So Shalini ji, good presentation. Thanks for that. So my questions are around first about the IA, that is investment advisory. Are you a SEBI registered investment advisor or you are a mutual fund distributor? What do you normally do? That's one thing. And the second question is about your insurance advisory. So are you kind of a marketing agent for specific few products, for selling few company products, or you are like giving a agnostic advisory for insurance, irrespective of which product you sell? And then I have one more small question, but once you answer this, I can come to that.
Right. So your first query was on in terms of the revenue models and basically the model towards investment advisory. So Ingenetus is a mutual fund distributor. We distribute financial products and mutual fund products to our clients. And we do not charge any kind of an advisory fee because the asset management companies tend to take care of your revenues. Your second part of the question talked about insurance advisory. Over there also, we are agents to multiple insurance companies in terms of both life insurance, health insurance, and general insurance. And again, the insurance companies are able to take care of the revenue. We do not charge the insured for any sort of a fee over there.
Right, right. But as an agent for insurance companies, you said you're an agent, but you can only have that empanelment with 2 life insurance and 2 general insurance as per the norms, right? So do you work like that, or is it just like a kind of on what do you call, like marketing fees kind of thing that you receive as a business model?
No. So since there is an IIDA license, we are licensed to work with multiple insurance company. And depending upon the needs of the client, depending upon what sort of plans fit a particular customer's need, appropriate insurance products are then sold or pitched to the customers.
Great, great. And my last question is related to the financial planning part, which you are showing, right? With the nice pictures and everything. This is in your website that you have this built, or is from some other tool that you're showing this based on your own website, I believe, right?
Right. So this is our own website, but this is something which is towards a financial planner. It's an interface which is available to a financial planner and not a client in order to analyze and map goals. So it's something as a financial planner we are able to utilize. We've taken a subscription for a particular software, and we are able to utilize this tool in order to plan the financial goals for an investor.
Okay, and as per the SEBI norms, you are not supposed to provide it in a printout format, but you can show this to the client, right, as part of the financial planning process. When I'm not an RIA, for example, I'm not an RIA, but I'm also, let's say, an MFD, but I want to do this goal-based advisory. In that case, I can walk them through using this kind of website and of course, softwares, plugins. But however, I am not supposed to provide a printed thing. I'm not very clear about that norms and regulations. Just wanted to know that from you as a practitioner.
Like as a CFA and even an IA, you are supposed to maintain complete guidelines with respect to ethics and with respect to the confidentiality of the client. So whether you're providing the goal planning process for an individual in a soft copy form or in a printed form, it can only be shared with that individual. There are no restrictions of sharing it in an electronic or a hard copy form, but as long as you're sharing the financial goal of an investor with that person only, you are completely authorized to do so.
Okay, no, that's clear for me. But the only thing I was considering is somebody was mentioning that only if you are a SEBI registered financial advisor or investment advisor, you can even create that plan and provide that plan to the client. But I think it's not correct, right? As per your statement, even as an MFD, I can create the plan and provide it to the client.
Okay,
but without mentioning
you're talking in terms of a mutual fund distributor.
Yes.
Right. So in terms of a distributor, you're only authorized to distribute the product. You cannot advise the client on what products should they be taking, and you cannot charge the person for that sort of an advisory. However, you can do the distribution and execution of that financial plan.
Right, but I cannot provide the financial plan document itself to the client. Is that correct?
Not as a mutual fund distributor.
Yeah, I cannot, but I can just walk them through for that particular, because in the website, your website, it says financial planning is also done. That's why I'm asking whether it is okay to, if I am also creating a website, can I put it like that as a mutual fund distributor that I'm offering financial planning services as well? Or does it require a SEBI registration is my question.
Right. So SEBI registration advisor will be required in order to give advisory on the various products that you are picking up. So this is a financial plan. This is a goal planning process.
Okay, so that's
goal planning process does not restrict you whether you are a SEBI registered investment advisor or whether you are a distributor.
Okay, got it. And you mentioned about a software. There were questions also in the chat. What is the software that you were kind of licensing in for your website?
Right.
Which is it?
Right. So the subscription software that we use is from an organization called Red Vision. Red Vision provides these software services for various mutual fund distributors and investment advisors.
Okay. And you use something like IFA now or something like that to track the holistically, or this is the software that you use for the client's accounts and.
Sorry, come again? Could not.
So for checking the client's progress in terms of goals and everything, right? In one unified platform, this is the software that you use.
Correct.
Because there is something called IFA now. There is one more software which normally I hear. Is that also kind of something similar to Red Vision?
I'm not aware of the software that you are.
But this is the only software that you would use. That you are using. Okay, right. That's it. Thank you so much. It was very interesting.
Sure.
Kedarji, you can ask your question.
Yeah, so I think many questions asked by the earlier participant, and that were some of my question includes. So just at the end, you said that there are two different things, that goal-based financial planning and financial advisory are both are two different things. Is it so?
Goal-based financial planning and financial advisory. No. So I'm not saying that these are different things. The earlier question talked about mutual fund distribution and they talked about investment advisory. So these are absolutely two different things. Financial planning, financial planning will have to be done before
Okay.
you either give an advice or whether you distribute the product. So your meetings, your interactions will have to start. The entire financial planning exercise has to start with goal planning. And depending upon whether you're an investment advisor or you're a mutual fund distributor, you need to take up the appropriate approach.
Okay, and the software you're talking about for a goal-based planning,
Hmm.
which software you are using or recommending?
Right. So we utilize a software called Wealth Elite. It has been developed by an organization called Red Vision.
Okay, thanks. That answers my question.
You can unmute Mr. Harsh Modi.
Yes, Modi ji, please go ahead.
Yeah, thank you, Shalini, for the lovely presentation. Very insightful. Like, what do you suggest in terms of like the roadmap of becoming a mutual fund distributor at the same time, parallelly following doing a CFP, and then there is the certified wealth planner thing also. So, is it that the degrees and the certification helps to get the stickiness of the client or to acquire new clients and the clients to stay with you? The default is that yes, you give the right advice, but investing time to get certifications beyond CFP also to move from an MFD to or be in a combination of being a mutual fund distributor, insurance distributor, and financial products distributor, also giving advice in the fiduciary interest of the client. So that's what I just want to understand. And like with the digital technology and all the information which is available so much everywhere, clients think they know it all. And sometimes when you are trying to talk to them and they say, okay, come on fast, like, we know it all, like, move ahead. So how does one overcome these kind of objections that come across practically? And does this software which you're using helps us to do the permutation combination in terms of goal-based planning, to shift the timelines here and there while, working at one's own level?
Right.
That's my question.
You put in a lot of points. I'll try to address all of them. The first you had mentioned was the investment time and whether taking up these certifications is advisable and is feasible as well, along with a being a mutual fund distributor. Before I was a CFP, I was still doing the same job, but it was not as structured. I was still interacting with the investors. I was still taking up their portfolios, still redesigning them and giving them my thought process behind it. But after being a CFP, there were two things. I developed a very strong structured approach to financial planning. And that will also answer your last question, that I was able to give a value add to people who were utilizing internet, who were utilizing Paytm and ET money in order to take up funds, in order to take their returns and just do the investments. CFP helped me develop a structured approach of doing a goal planning, including behavior management, including the asset allocation, and taking up various strategies as well. So it helped me tie up all of these things. It helped me develop a very holistic approach to the individual's financial planning. So through my software, through my discussions, I'm a one-stop shop for the person doing investments, doing insurances, doing lending, doing estate and tax planning. That's what CFP helped me to do. It is worthwhile investing the sort of time that you can continue to do your job. You can start studying on weekends and invest a year in it, but it's very worthwhile taking up the CFP certification in order to give this value add to clients. As far as your query on people who know it all go, what sort of a value add can you give? One, you can definitely develop a holistic approach. So, and secondly, why people and all of this robo advisory and the funds and returns will be able to tell people which funds to get into. They are never going to tell them which funds to get out into, or when is the right amount, when is the right time to actually get out of these funds. No robo advisory is going to tell an investor, look, you've made a good amount of profits and now markets are highly valued. Now is the time when you need to have a look at your goals, come out of these investments, book profits and shift towards debt instruments, because that will help you completion your goals. That's the sort of value add that you as a financial advisor can give to all of these people who know it all.
So just one last question, like now, let's say if I look at from a strategy point of view, like, getting onto the signing up for the CFP and start doing my course. And would you advise that, to start building one's digital capabilities at the same time parallelly, so that by the time in 1 year one finishes one CFP and, one is market ready and hit the road running in terms of visibility and in terms of thing, or work with another experienced CFP to get that, what you said, that holistic approach, a handle on the holistic approach, because knowing theoretically something different and working practically on different clients' requirements is something different under the being a protege of a very seasoned certified financial planner. So how do you suggest to go about that also?
It's worthwhile developing your digital capabilities as well. You have to stay relevant to the times. When investor has an app where they can see everything from their fixed deposits to mutual funds to cryptocurrency to stocks to paying bills, nobody is going to, and if somebody gives them the app on the phone, it's very likely that they're going to want to shift you. They might start with a fixed deposit, and when they see, hey, I can also do mutual funds over here, why am I paying a certified financial planner a separate fee for doing that? I'll skip to that as well. When I see that, hey, I can also do stocks over here, this app is giving me the advisory to pick up these stocks which are delivered double-digit returns in the past 1 year. Why should I listen to a certified financial planner, which this app is going to do for you? So you have to stay abreast with the times. You have to realize that digital technologies are the technologies of the future, and you have to ensure that your financial planning approach ties up with the digital capabilities and is able to offer a very relevant proposition to the customer. So we're also doing that. Before that, we did not have a website, we did not have an app. We were still giving computerized or printed statements from a CAMS or a K fintech in order to give the returns to the investor. But once we developed a website, once we developed an app, we were able to offer the user ID and credentials and the power and the control to the investor. Look, you can view your investments on a daily basis. You can, whenever you see there's something happening over there, you want to discuss, you can give me a ring, we can discuss that. And I am giving you the full control to transact as well on that. So there's nothing that is in my control. This is your money, entirely in your control, and you are free to take it out whenever you want. So ensuring these digital capabilities are only taking us ahead of our competitors, and they are ensuring that stickiness of the client with me.
Okay. And how does one work with a seasoned CFP to get that experience? Like, let's say it's going to take 6 to 8 months to complete one certification, and after there's a requirement that 1 year at least you should be working with somebody. So how does one do that?
Look, it's not necessary to work with a CFP. You must have financial experience in a financial background. In order to be able to apply for a CFP. It can be an experience in any sort of, you can be working with a banker, you can be working under an insurer, you can be working with an NBFC. It will still be counted as a relevant financial experience. And then post that experience, once you get the education, you'll be eligible for that CFP certification.
Okay, cool. Thank you so much.
Kamalji, you can mute yourself. And this is the last question we are taking. Then Madhu ma'am is also here. She'll present. She has their own slide.
Good afternoon, Shalini.
Hi, good afternoon.
Ma'am, your presentation was very nice. I'm currently into a job and I'm looking to go for a CFP. So, any suggestion which institute to look for, or how to prepare for the CFP?
You're currently working somewhere and you are also interested in taking up a CFP certification, right?
Yes,
Is
ma'am.
that my correct
Yes,
understanding?
ma'am.
Right. So CFP is going to ask you for your time. Weekends are something you'll have to entirely devote towards studying, towards getting those classes. You can take up educational classes from a relevant institute. I did that from ICOFP. You can take your classes from ICOFP, excellent professors who have CFP certifications themselves. Um, they are also financial experts in their relevant domains in the market. So along with that theoretical knowledge, they'll also be able to give you a practical knowledge. So give your weekends for this education. Apart from the weekends, you will also have to devote at least 1 or 2 hours on a daily basis in order to clear your concepts. Uh, Getting extremely hands-on on financial calculators and on Excel sheets is very, very important. So yeah, these three things: the right attitude, determination that you want to be a CFP, and then the time dedication as well is going to help you conquer all problems, and it's going to help you become a CFP in your career.
Kishan, you there?
Yeah.
Yeah.
Thank you so much, Shalini ma'am, for sharing your experiences with the entire audience and giving us the right path to achieve our goals. Thank you so much, ma'am. Once again to you, ma'am. Thank you so much, ma'am, for joining us.
Thanks a lot. So I'll be closing the discussion over here.
Sure, ma'am. Thank you
Bye.
so much, ma'am. Goodbye, ma'am. Good evening, everyone, once again to you. Now I'll be welcoming Madhusina ma'am to continue with the further webinar. She is already a qualified CFP. She is already a IRDA MFI certified, and she is already a former director of Financial Planning Standard Board India Board, FPSB India. Madhu ma'am.
Good evening, everyone.
Good evening, ma'am. Handing forward to you, ma'am.
Okay. So it's nice. I was listening to your questions and your replies given by Shalini Gera madam, who is our student. So it was very nice. The good type of nice, very wonderful questions were asked by you. So I will be giving more little information about myself. I am also author of 2 books, Financial Planning, A Ready Reckoner, and Retire Wealthy. I am in this industry since 2004. I did my CFP in 2005. In 2004, I joined this course, and 2005 I completed. I am among the first 20 CFPs in India. Since then, I am into teaching, and I was a practitioner also. So since then I'm teaching at ICFP, and I'm handling the Mumbai campus from here. So I will be giving you brief introduction about CFP course. Already, I think many of you are knowing about the course, and Shalini has also explained to you very well about the future prospects as well. So this CFP program is now into, it is the topmost certification in personal finance. Including India, it is recognized in 27 countries, and it is a gold standard rated program. Now we have 4-in-1 certification program. There are 4 levels in the CFP program. So we start with level 1, level 2, level 3, and once we complete 3 levels, we become eligible for level 4. And level 4 again is into 2 parts. One is into case study, where you have to actually prepare a plan, and then next is, once your plan is selected by the board, then next is you will have to appear for a multiple choice based exam, right? So there are 4 certifications which you get. Personal finance and wealth focused curriculum. It contains all of personal finance. So once you do this program, you are industry ready to be absorbed into a job. From day one, you can start working, because this is theory as well as practical based program. It takes around 8 to 10 months to complete, and we have classes online on Saturday and Sunday. And we also have a weekdays program. If any of you want to join our weekday program, we have classes from Monday to Friday in the evenings. So all the options are available to you. You can go with classroom mode, or you can go with online study as well. Many of you who are working, who have a traveling job, they don't get time to attend classes on Saturday and Sunday, and they are from the industry itself. So they feel that they can do our online program where you can get the recorded lectures and you can study yourself and appear for the exams. The basic qualification is minimum 10 plus 2 required, 18 years of age, and there is no restriction. To get the certification charter, you have to minimum graduate. You should have minimum 3 years of experience with banking and financial service industry. You can, if you have experience in financial sector, in banking sector, finance sector, you can get the certification. 1 year of supervised articleship or training under CFP, that is also part of it. If you are not having 3 years of experience, then if you have 1 year of training under CFP, so there are so many financial planning firms in India. If you want to get training internship there, ICFP can also help you in getting the job there in Delhi as well as in Mumbai and other areas as well. So
one request, ma'am. Sorry to
yeah,
interrupt.
yes, please.
Slide is not moving, ma'am.
Slide is not moving. Just a minute. Now, can you see this?
Yes, ma'am.
Yes, ma'am.
Yeah, sure. So program is divided into 4 levels. 4 levels, we have 10 subjects to study. And then final level, as I explained to you, includes project and case studies also. How assessment is done, there are exams and certification at each level. So level 1, we have investment planning and personal financial planning, personal financial management, and regulatory environment. So there's 3 subjects are there in level 1. And then level 2, we have retirement planning and tax planning exam. Level 3, we have risk management and insurance planning and estate planning. So all the areas of a personal finance life of a person are taught. So if it concerns with the insurance part or retirement planning, or it is a tax planning, or it is estate planning, in India the focus is less on estate planning. People plan still for their various financial goals, but then their focus is retirement planning is also not given much importance, as well as estate planning is in the last step. Many people in India don't want to do estate planning at all. So estate planning is one subject here where we teach you all the various laws applicable, how a person should write a will, what are the various methods of writing a will, and then what type of wills are there. And while teaching, we have a lot of case studies also taught along with this, so that you know what type of court cases happen, what type of difficulties are faced by the next generation to get the money of investment of their parents transferred to their name. Regarding exams, we have online exams. Exams happen every 1 month. So our operations team is very, very efficient in managing it. So once you take admission, we form WhatsApp groups. Every month we have one WhatsApp group, and all the information is posted in WhatsApp groups. Even if you have any question which is not clear to you in the group, then our operations team helps you a lot. At every question which you answer, if you ask in the group, is answered to you. Either they call back to you or they write to you separately. So exams, one, you have to appear for the exam, one, you have to apply for the exams, or what windows are open. Every full support is given to you till you have done your CF, complete your CFP. Even after you complete your CFP, we are there here with you to give you support. If you want any support regarding your placement, or you have any query regarding your practice, we all are here to support you. So this is how level 1, I have explained to you the subjects of level 1, level 2, and level 3. And then we have final level. In final level, we have 3 modules to study. Final level is mostly about your soft skills. We know how to plan, we know how to do the calculations, how to invest for various financial goals. But how to interact with the client, how to understand them, how to discover them, is how to engage them. Because once you engage a client, you have to see that he's there with you till the client is alive. So then they will also recommend more clients to you. So this final level is about learning about soft skills, handling the clients. Some clients are difficult, some clients are very easygoing clients. You may get various type of clients. So how to keep yourself emotionally strong, that you are able to handle any client you attend, any client you meet. So it should be your attitude towards, so as Shalini also said, your attitude is very, very important. Where you reach in life, your altitude depends upon your attitudes. I think all of you agree with me on this. Your
Yes,
attitude
ma'am.
is everything, yes. Then after you study these 3 modules, financial planning process, engaging clients, and then developing financial plan, then FPSP gives you a case study. You have to prepare a plan, that is a practical based plan you have to make, and then you have to submit that plan. So there are how you complete your 4 levels. Knowledge and skills: personal finance, wealth management, and financial advisory. Then investment planning, tax planning, and estate planning, investment laws, income tax laws, direct income tax, succession laws. You are able to study financial calculation in MX Excel as well as in calculator. You learn time value of money. Time value of money helps you to do various calculations so that you can calculate how much amount to be invested for each goal. Then we teach you core concepts of personal finance, behavior finance. How many of you have heard about behavior finance and how to manage clients? Then preparing financial plans, their portfolios and portfolio analysis, evaluation of portfolios and revision of portfolios. Behavior finance there is total one full topic, one full chapter in behavior finance, where you will be taught how to understand the psychology of investors. Every investor is different. So how to handle them, how to discover them, how to interact with them. As I explained to you, behavior finance is understanding their biases, if they have any biases. And then how they take irrational investment decisions, that will be taught in behavior finance. How investors feel that they're rational, but when it comes to investing money, they become irrational many a time. So how to understand their behavior aspects and how to help them. So you as a wealth advisor or financial planner have to help your clients, not only helping them but also educating them. Because what happens when there is less of education, they are not able to take right decision about their money. When you provide them more information, more education, even their risk appetite increases. They are able to think properly about their goals. They are able to think more about their achievement of their financial goals. So this knowledge and skills we are giving you. And then what are the career prospects? Banking and financial services are looking for CFPs. I get calls almost every week about asking for CFPs. The companies want to hire them. Wealth management companies, their focus is on getting CFPs. Then even tax advisory firms, financial planning firms, brokerage houses. You can set up your own advisory business. You can become an independent financial advisor. Then you can also join in fintech startups. You can also join in portfolio management companies. There are many coming up now. Asset management companies like mutual funds, insurance companies also look for CFPs. Building credibility and recognition, faster career growth, financial coaching, trainer, advisory, faculty. You have so many options available to you. Unconventional careers in financial journalism, blogging. So there are so many options available. You can choose the best which suits you after completing your CFP. India's first largest education partner of FPSB, ICOFP is the part of Bajaj Capital Group. CFP program was brought to India by ICOFP in 2002. I attended this program when FPSB first came to India to speak about financial planning course. We have not heard about this in our life at that point of time. We knew about mutual funds, we knew about PPF, we knew about banking, but this was a new concept to us all. So they brought this concept into India. They started their college in 2002, and ICFP is number 1 in CFP in terms of number of students who have passed out, in terms of the curriculum, the content, the faculties. We have most experienced and qualified CFP faculty. Faculties are CFPs, CFAs, chartered accountants, and PhDs as well. There are some practicing CFPs as mentors and coaches, and Former FPS Media Director's program head, that I think I was talking about me, Kishan, I think. Highest number of CFP certificates and passing the most notable names have been ICFP Mumbai. You will be surprised that level 4, all the students who appeared for level 4, they all clear 100% result came in for level 4. So there is a record of reaching 100% passing percentage, and there's a consistent track record for 19 years. We have been into this teaching industry now, and we are doing very well. And we want to create more and more financial planners in the times to come, because we know that the industry requires many CFPs. The requirement is more. The number eligible existing are very, very less. So there is a huge gap, and we want to provide the maximum number of CFPs so that that gap can be reduced. Again, we have classroom sessions at Delhi and Mumbai campuses. We have only weekend classes. At present, we are only having online classes. Then we have programs like instructor-led live classes online at Zoom. That is, actual classes with the faculty. Then we have weekdays batch Monday to Friday and weekend batch Saturday to Sunday. Both the options are available to you. Class recordings are also shared for review. If you are not able to attend any session, or if you have attended the session, in the same day WhatsApp group, the recordings are shared, so that if you want to revise the concept, you can see the recording. So much of support is given. Then we have workbooks, we have mock test online available. Before you go for exam, you can practice the mock test, and the faculties are always available to you. Whenever you have any question, the faculties are always available. We sometimes arrange extra classes for students, doubt clearing, and before every exam we have a doubt clearing session with the faculties. Even before doubt clearing and after doubt clearing, if you have still some doubts left, the respective faculty is there to help you for your exams. So in our e-learning session, we give you pre-recorded video classes, and you can study at your own space. It is ideal for those who are having existing experience and they think they can study themselves. They are not available on Saturday, Sunday for classes, so they can choose this e-learning sessions as well. So what we provide you? Concept books, we have workbooks, then group projects are given, preview videos are given, review videos are given, online mock tests available for every subject. Then we have assignments in every subject topic given to you. We have doubt clearing sessions before every exam. Then we also give you case studies for practice, and we have guest lectures as also available. So we arrange so much for you like this. Now I come to the fees part. Registration fees you have to pay one time, that is $165, and then you have to subscribe to the content also level wise for each level. Approximately 1 to 2 months gap. $160 for level 1 to 3, and for final level you have to pay $120. Then you also have to pay examination fees for each level, $61 for level 1 to 3 for each level, and $122 for the final level. Especially certification fee, if you want after every exam you want certificate, then you have to pay $100 for that. And if a CFP certification membership fee, that you have to renew your CFP certification every year, so you have to pay $120. As of now, they are charging, I think, $100, Kishan. They charged me $100. Yes, yeah, I paid $100, so they are charging this as of these days. So you can do it faster and pay $20 less. You can save here. And then the fees payable to ICFP is like this. Level wise study note classroom 65,000, virtual 55,000, and e-learning 40,000. CFP level 1 it was 65, we have made it 55. CFP level 1 fees is 17,500, but we are charging 15,000. Kishan, for when they have to take admission to get this fees?
Ma'am, once we are now starting with the weekend classes batch.
No, this fees which you have reduced. So they are till when they have to take admission for this to get this benefit?
Ma'am, today.
That is for today only.
Yes, ma'am. Today after the webinar, yes.
Yeah. So CFP final. So this is how we have reduced the fees. If you want 4-in-1 study mode, you have to pay once 37,500. Am I right?
Yes, ma'am.
And e-learning, you have to pay 27,500. So you are saving around 47% in virtual. And in the case of e-learning, you are saving 45% if you take admissions today, right, Kishan?
Yes, ma'am.
Right.
That's quite
And
is there.
yeah. That discounted fees for today. You can save. So we have further reduced it, right, Kishan?
Yes, ma'am. Yes, ma'am.
Yeah. Okay. For today, we have reduced further. So 50% discount on FPSB content fee also. So you can save yourself 150 if you take admission today. There are also a facility of loan available for student. If you are unable to pay these fees and you want to take a loan, then there is a loan available at 0% interest. That is all. This facility is also available. Pay just 10% of fees today, and there are 6 easy EMIs. So you can avail this option as well. So these are the numbers where you can call, and these are our websites which you can meet to know further about the course. And if you have any question for me, I'm also a certified financial planner. I have practiced also. I worked in mutual fund. I worked in bank also. So you have any query, you can definitely ask me.
Ma'am, couple of questions I can see in the chat box also.
Right. Okay.
If you can go through the chat, ma'am.
Yes. I will definitely.
So what is the passing percentage in CFP exams?
Passing percentage, what I observed is any student who is coming for classes regularly is difficult to fail actually. If you are attending the classes and you are studying the content given by us and practice the workbook and mock test, the result around 90% students are passing every level. So I can see the question, can reverse mortgage be helpful for retirement planning? Can a client get, sorry, I'll go one by one. So who asked this question of reverse mortgage? Yes, reverse mortgage is helpful in financial planning when all the other sources of income have been over. Then definitely the last option is reverse mortgage. Ma'am, now I am housewife, so is it possible for me to do work from home after doing CFP? Please guide. Work from home these days is given, facilities given, but I think initially you will have to work now because everything is opening up, offices have opened. So work from home was only till this COVID time, but yes, many organizations are giving this option of working from home also. You can check what is the passing percentage of CFP. As of now, you can take 60%. I don't have any experience in finance sector, but from last month onward, I started working with one leading AMC. I want to do CFP as is possible. Yes, it is possible. It will help you to do your work in a structured way. CFP will definitely help you to give value-based advice to your investors. Now you are giving product-based advice. CFP will guide you to give a value-based advice, looking at their requirements, their risk appetite. Okay, one more question I can see. Is there any refresher course for current CFPs who want to learn about how to do calculations in Excel as well as financial calculators? So, Kishan, we have to, we can definitely think about this.
Yes,
we can have a refresher course where you students who want to join can definitely come. CFP program tough to study? No, not at all tough. If you are concentrating in class, it is very easy. The faculties teach you in a very simple way, and you can ask as many questions you want in the class and after the class as well. So it is not difficult at all. Ashish, the CFP certificate will need to be renewed. Yes, it has to be renewed every year because financial services industry is a dynamic industry. It keeps changing. A lot of regulations keep coming up, so you have to upgrade yourself. If you don't keep yourself updated, you won't be able to give right advice to your customers. So it is very important that you renew your CFP certification. Physical classes, we will be starting soon, but yes, as of now they're not available. Retired person can join, definitely. PhD retired person can join. Many people who retire, they join this course and then they start their own practice. What's the basic difference between RIA and CFP? RIA is a registered investment advisor. After doing CFP, you can become RIA under SEBI guidelines. So for RIA to become RIA, you have to have some professional qualifications with you. Will I get physical or virtual class certificates? You will get certificates, physical certificates, once you clear level 1, 2, 3. Then our faculty or employees are working in the respective fields. There are the mix of employees as well as the professionals from the other organizations. Career path, Ashish, I explained while I was running through PPT. I also explained career path also. So your question is, my friend has worked 1 year under CA. Can he opt for CFP? Yes, definitely he can opt for CSU, CFP. Okay, I think I tried to answer the question. Prabjot Kaur has asked me, Madam, into I'm a 12th pass student, should I join BBA in finance planning and the CFP, please guide. So CFP, you can do your graduation along with the CFP. CFP, your classes will be held on Saturday and Sunday. Monday to Friday, you can attend your regular college, and Saturday, Sunday, you can attend CFP classes. Can you explain challenge pathway eligibility? No, there is no challenge pathway now. You have to appear for all the levels. What if I get admission today and start my program 6 months from now? Is it possible? Kanaya, Kishan, you will have to answer this question.
Shagun, you can book the seat for Jan or Feb batch if you're looking also to join that batch, and we will get in touch with you after this webinar and resolve your queries on this.
Okay. Can a diploma holder in engineering do? Yes, definitely diploma holder in engineering can do CFP, because engineers are very accurate in calculations. So they do best when they do CFP. They learn very quickly. So you can, as an engineer, also do opt for finance and understand personal finance, because the scope of this is increasing day by day. People are now investing money into mutual funds. They are investing money into direct stocks. So they need someone who can guide them. They need CFPs who can guide them. What is the best option for them? Is it available in Hindi? Hindi, the paper is all in English, so not available in Hindi. Is e-learning self-paced and how to clear doubts? Yes, for e-learning also we have doubt clearing sessions. No issue. If you want to do e-learning with the e-learning way, you can do it on your own way. When you have doubts, faculties are there to guide you. Is there any age limit for CFP? No, there is no age limit. You can do at any age. Even I have taught a student of 75 years, 77 years. One of my last students was 78 years old. He's in Delhi and he called me that I've joined CFP in your program. I want to buy your books. So he interacted with me. He keeps sending me messages, and I asked him, where have you reached? He has cleared level 1 also. He's now preparing for level 2. He's 78. I say I'm very happy that at this age you are doing CFP. Sir, I want to learn. Although I have good financial resources to meet my retirement expenses, but still I want to learn and I want to help people to manage their finances. Time duration, it is on up to you. It will take around a year minimum, but yes, you can do it faster also, 8 to 9 months also. It all depends how many hours you can give to your studies every day. Any more question you can ask? I think I have tried.
You can raise your hand. I'll unmute you one by one.
Yes. So I have tried to answer all the questions which were there in the chat.
Yes, ma'am.
Yes, Piyush wants to ask a question.
Yes, Piyush ji, please unmute. Yes.
Yeah, if I join for e-learning, what is the fee if I am also a retired person and want to join? E-learning may be a better way.
Sir,
but
do you get time on Saturday and Sunday to attend classes?
That also I get, yeah.
I think e-learning is fine, but I think if you attend classroom mode, you can have a lot of interaction with other students who are from the industry as well as with the faculty. So then you enjoy more. Because self-study, you will have to be disciplined in your own way. But when you are coming for classes, you automatically become disciplined. Or that automatically that time, time setting is there, and you are able to study also. Because
so
when
if give fee today, is there any validity that I have to complete within a year or so?
No, sir. ऐसा कुछ नहीं है. You pay the fees, take admission, start attending classes, and you register with FPSB only when you feel comfortable that now you can appear for exam.
Okay.
You can do it at your own space. Yes, you can do it at your own space.
Okay. So for all level, we can give exam fee different time.
Yes, you can do that.
Okay, madam. Thank you.
Any more questions?
No, ma'am, I can't see any question here.
Okay, then. Thank you very much, everyone, and all the best. I hope to see many of you in classes.
Thank you so much, ma'am. Thank you, everyone.
Thank you, ma'am.
All the best. Take care, all of you.
Thanks, ma'am.